year or so, the market used to be very affected by the 10-year treasury yield, right? So every time there's a fear of inflation, every time there's hotter than expected economic growth or employment numbers, the 10-year yield, every time the 10-year yield goes up, the market will drop a lot. The 10-year yield goes up, the market will drop a lot. But this time, especially professional investors and even retail investors, they miss this bull market. So this is one of the most hated bull markets in recent history. And many bears out there are very angry, right? Because they've got all this cash sitting on the sidelines and the market is going up without them. So every time the market goes down a bit, the bears go, ah! Oh, sorry, the previous bears. Now they start to put their money into the market and the market goes up again. So they keep buying it up, right? Because they missed out, they need to get back in. And currently we have got over 6 trillion in cash on the sidelines, parked in money market funds. And this cash is looking to come back into the equity market, especially once the Fed cuts rates in June and they find that they can't get as much interest rates on their money market accounts. They start to rush back into the stock market, and that's when the market will really, I think, really have an even bigger gain in the second half of this year. Again, event, if you guys recall, and I showed you the event last year, the 6th wave event, if you guys recall, and I showed you this chart. I said that, every few decades, there's a wave of innovation that transforms our lives, transforms the stock market. And in the last 250 years, we had 6 of these innovation waves. The second wave, the third wave, the fourth wave of innovation that only started, mind you, in 2020. So we're only in the 4th year of this AI and automation revolution that will last at least the next 10, 15, 20 years. So we're just at the beginning. That's what I'm saying. What kind of investor? Well, no one can see the future, but if you look at the past, you get a bit of idea. So in the 5th wave that was driven by the internet, by mobile, and by software, you can see that the S&P 500 gained 1,950% over that 30-year wave.